Hey everyone, happy Saturday, October the 14th, 2023. This is Danilo Bogdanovic, Realtor and Premier and Principal Agent with Redfin, coming to you with an update on September. Now that the dust has settled from the previous month, I wanted to share the numbers with you and also get into a little bit of what the market is feeling like currently, as well as what we might expect for the next month to 2 months through the end of the year. I wanted to start off by saying that the market, which I get asked this all the time, how is it? It's very interesting, keeps you on your toes, fascinating, very fast paced, and it's very hyper local. So these numbers and statistics I'm about to share with you are for Northern Virginia. Keep in mind that your hyper local subdivision or cluster or community is going to have its own market, which is might be related to the local market, but it definitely has its own personality and character. So what is the Northern Virginia market? Well, I've defined that as Loudoun County, Prince William County, Fairfax County, including Arlington County, Alexandria City, Falls Church City, and then Leesburg City incorporated in Loudoun. I know that some would say that other counties a little bit further out might be considered Northern Virginia. That is up for debate, but the counties I just mentioned are pretty much everyone's in agreement with. Those are definitely Northern Virginia. So I just wanted to do that as far as apples to apples comparisons. I'm going to be using that as a definition of Northern Virginia moving forward, unless you guys tell me otherwise, and I have this huge shout out to move it to include other counties. So for the sake of these numbers, I'm going to start with September of 2019. The number of new actives in 2019 of September was 1,087. New actives is new listings hitting the market for sale. Now, at the same time that month, 2,759 homes went under contract. So 2.5 times more homes sold than hit the market as new. September 2020 was, there were 2,589 homes listed in Northern Virginia in September. That is a huge jump from the previous year. Now, 3,585 homes went under contract in Northern Virginia, which is 1.4 times the number of new actives. So the number of new under contract went up, but the ratio between the two went down. Now, in September 21, there were almost the same number of homes listed for sale, 2,545, and there were 3,365 homes that went under contract. So slightly less, so the ratio was 1.3 of homes under contract to new homes listed. Now, last year, 2022, there was a sharp decrease in the number of homes. Now, keep in mind that the second half of last year was pretty brutal. We had an all-time high, the previous all-time high, in June, July of 2022. And then between then and the end of the year, the market corrected an average of 5%. So prices declined 5%. And that's mainly because rates started to tick up. So there were only 1,845 homes that were listed in September of 2022, a big decline from the 2,545 the previous September, and only 2,112 homes went under contract. That's a 1.1 ratio, so the ratio keeps declining. Now last month, and now keep in mind that the first half of this year, that 5% that we lost, we gained it all back, and then some. We actually made new all-time highs on average in this area, and also on average nationally, between January of 23 and then today. Now, last month we had 1,685 new homes listed, or new listings, which is down from the previous year. And we had only 1,843 homes go under contract. So that's a ratio of under 1.1. So we're almost even as far as new homes, new properties being listed and the number going under contract. So we're not, that might make you think it's a balanced market. We're not quite there yet, just because there's still not enough inventory and there's still more demand than there are, listings. So it is still a seller's market, but by no means is it the crazy seller's market of 2021 and the first half of 22 or the first half of this year. But it's still, for the properties that are priced properly, that are presented properly and marketed properly, those are selling quickly. Now, related, mortgage rates definitely are playing a driving factor in this. A lot of folks who have a 2.5, I mean, even 1.8, I've heard 3% mortgage, who want to move into a bigger home, or just, lateral move, or even downsize, are waiting because they're not going to pay 7.5 or even close to 8 for a new mortgage. The monthly expense is almost the same, but it makes no sense if you're downsizing to have the same monthly payment, or triple your payment just for a slight upgrade to a more expensive home. So, keep that in mind. There's a lot of sellers who wish they could list their home, but they're not. Now, mortgage rates. So they've come a long way. Obviously, remember the days of the 3%ers. 1 year ago, they were 7.25. That's when that was the second half of 22, when the market was going down, went down about 5% from July through December. So that's why, because rates had jumped up and spiked to over 7. Now, 6 months ago, they were back down. 6.625 was the average. 3 months ago was 6.75, and that was when things really started rising quickly, because 1 month ago they were 7.25, and then just in the last 2 weeks, they've been bouncing back and forth between 7.6 and 7.8 on average. These are the U.S. national average for a 30-year fixed conventional mortgage, okay? Now, I've heard some folks in the 8s. I've heard some folks a little bit lower. It depends on your credit score, DTI, financial situation, et cetera. That's something for a lender to, provide you with that information with. What can we expect for the rest of the year? I mean, we are in what is typically, we're approaching at least, typically one of the slowest times of the year, which is the middle of November through the end of the year, the holidays. Middle of September through just after Halloween is kind of the quote unquote fall market, which is the better part of the second half of the year. And then it starts to slow down again just before middle of November, just before Thanksgiving, all the way through the end of the year. And then it starts to pick up again, usually middle of January, and then into February, and then the spring market, quote unquote, starts again. So we should see seasonality. Now, the higher the rates, the more listings. And the reason why is, this is overall listings, not new listings, because the less affordable something is, the less chance it has of selling. So every time rates start to go up, you see stagnant inventory rise. Now, we are by no means anywhere near even a balanced market as far as supply and demand, so we do have a ways to go. It could be actually in our favor to get more listings on the market if you're a buyer. Obviously, if you're a seller, you don't want that. So it depends on whether you're buying or selling. If you're doing both, it kind of comes out in the wash at the end of the day. So everyone's different. Everyone's situation is different. Whether you're buying, selling, what type of move, is it lateral, are you upgrading, are you downsizing, a bunch of different factors go into it. So if you'd like to know more about what the current market is like for you in your specific situation, or if you'd like to know, hey, what's my hyper local market in my subdivision or cluster, please don't hesitate to reach out. Happy to provide you with a free analysis, chat with you anytime. So I hope you all have a wonderful Saturday, rest of your weekend. Enjoy the fall colors. They're coming into peak here in about a week, and I'll talk to you guys soon. Thank you.